Welcome back, my friends. The news today is that Tesla's awful quarter has Wall Street on edge ahead of delivery numbers. Tesla shares plunged 29% in the first quarter, the worst period for the stock since the end of 2022 and the third steepest quarterly drop on record. Investors are concerned about auto sales, as the company faces increased competition from China and disruptions in Europe. According to data from S3 Partners, Tesla shorts are up more than $577 billion in 2024, making it the most profitable name in the US. We obviously have not heard all of the details because Tesla has not officially reported earnings. But everyone seems to be bracing for a financial bloodbath for Tesla in Q1. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. It was a brutal first quarter for Tesla investors. Shares of the electric vehicle maker plunged 29% in the first 3 months of the year, the worst quarter for the stock since the end of 2022, and the third worst since Tesla went public in 2010. It was also the biggest loser in the S&P 500. Chief among concerns on Wall Street is Tesla's core business. The company is poised to report first quarter vehicle production and deliveries in coming days, and even bulls are expecting sluggish results, despite price cuts and incentives for buyers dangled throughout the quarter. As of Thursday, the last trading day of the quarter, analysts were expecting around 457,000 deliveries for the period, according to the average of 11 analyst estimates compiled by FactSet. That would mark an increase of 8% from 422,875 a year earlier. Estimates for the quarter range from 414,000 to 501,000 deliveries. Analysts who updated their numbers in March were the most bearish, with their estimates ranging from 414,000 to 469,000. Independent autos industry researcher Troy Teslike expects the company's deliveries to come in below even the lowest estimate captured by FactSet. Deliveries are the closest approximation of sales reported by Tesla, but are not precisely defined in the company's shareholder communications. Here are 4 major reasons for Tesla's first quarter slide. Unrelenting competition in China. In China, there's competition from an onslaught of fully electric vehicles, including new models that cost less than Tesla's popular Model Y SUV and Model 3 sedan. To end 2023, China's BYD dethroned Tesla as the world's top EV maker. In the first quarter of this year, BYD kept up the pressure, launching its Qin Plus EV at a starting price of around $15,200, followed by its BYD Seagull, a small all-electric hatchback with a starting price below $10,000. The rapid rise of Chinese electric vehicle maker BYD. Chinese smartphone company Xiaomi is getting in the game with its first vehicle, a fully electric SUV that costs far less than Tesla's entry-level Model 3 sedan. Xiaomi CEO Lei Jun said the standard version of the SU7 will sell for the equivalent of $34 to $8 in China, a price he acknowledged would mean the company is losing money on each sale. Tesla's Model 3 is about $4,000 more than that. Tesla slashed prices in response, but sales were still sluggish. According to data from the China Passenger Car Association, Tesla sold 71,447 of its China-made cars in January, including 39,881 sold domestically, representing a drop from December. The numbers slid again in February to 60,365 China-made Teslas, including exports. As sales dipped, Tesla reduced production at its Shanghai factory, shifting staffers from working 6.5 days to week to 5 days, Bloomberg first reported. Tesla didn't offer guidance for 2024 in its earnings call in January, but analysts see Tesla's China struggles as a harbinger for a rough quarter, if not full year. Deutsche Bank analyst Emmanuel Rosner lowered his price target on Tesla this week, citing weaker than expected China sales and the company's recent plan to cut production in the region. Rosner is now expecting Tesla to report deliveries of 414,000 for the first 3 months of 2024, and is predicting just mid-single-digit growth for the year from Tesla. Red Sea attacks, activist clashes in Europe. There was also drama in Europe. Tesla and other manufacturers like Volvo suspended some production on the continent in January due to a shortage of components following attacks on shippers in the Red Sea. Iran-backed Houthi militia attacks have continued to disrupt one of the world's busiest routes. Then in March came a dramatic protest by environmentalists in Germany, objecting to Tesla's plans to expand the footprint of its car and battery factory in Brandenburg, outside of Berlin. The protesters set fire to electrical infrastructure near the Tesla plant. While the fire didn't spread to the factory, it left the facility without sufficient power for operations, forcing a temporary suspension in production. CEO Elon Musk visited the German factory after the attack to reassure employees. He also called the protest extremely dumb. Tesla's head of policy, Rohan Patel, wrote on X that Tesla's mission is to create zero-emissions products. But to do that well, we also focus on creating the most sustainable factories, along with a culture to do the right thing in our community. Meanwhile, in Nordic countries, Tesla service technicians and other workers have been on strike in support of the Swedish labor union If Metal. The labor group has been pressuring Tesla since October 2023 to negotiate and sign a collective bargaining agreement with its workers. If Metall's website says that 9 out of 10 workers are union members in Sweden, yet Tesla has resisted unions, as it consistently does in the US, and rebuffed If Metall's efforts to negotiate. Aging lineup, early days for Cybertruck. While EV sales are still gaining popularity worldwide, the growth rate has slowed. And with Tesla no longer the dominant player, every new product becomes more crucial. The Cybertruck is still in its very early days and has a niche audience. The company began delivering the angular, unpainted steel model of the truck in December at a promotional event in Austin, Texas. Musk previously stated on an earnings call that Tesla dug its own grave with the sci-fi-inspired Cybertruck. In an interview with Tesla fan and auto critic Sandy Munro in late 2023, Musk cautioned that the Cybertruck is not something that will be material to Tesla's financials in 2024 and will probably be material in 2025. Tesla has been gearing up production of its refreshed Model 3, known as the Highland in Fremont, California. Forbes' Larry Magid wrote, "Visually, the changes on the outside are subtle." He also disliked Tesla's controversial design decision to omit stalks from sides of the steering wheel. Highland drivers use buttons and on-screen controls to shift between drive, reverse, and park, or to signal a turn or lane change. Tesla does have a totally new platform in the works, a more affordable EV that fans refer to as the Model 2. But it won't be delivered to customers for years. Musk control and controversy. Musk has continued to bet that Tesla customers and shareholders will stick with the company regardless of his increasingly incendiary rhetoric on X and beyond. Earlier this month, Musk met with former President Donald Trump in Florida. He's called for a red wave in upcoming U.S. elections, and he shared, liked, or otherwise promoted far-right accounts and content on X, where he now has 178.8 million listed followers. He has repeatedly disparaged undocumented immigrants, ranted against corporate diversity initiatives, and made absurd claims that migrants from Haiti are cannibals. Musk's political ideology stands at odds with groups of people most likely to buy his products. Proponents of electric vehicles tend to be left-leaning ideologically, according to research from Pew Research and Gallup last year. Musk has also wagered that Tesla shareholders and its board of directors will follow his lead. In February, Musk said he would move for a shareholder vote to transfer Tesla's site of incorporation to Texas from Delaware, after a judge in Delaware voided the $56 billion pay package that he was granted in 2019 on grounds that the board failed to prove the compensation plan was fair. Before the ruling, Musk had begun pressuring shareholders and the Tesla board to give him more control of the EV maker. "I am uncomfortable growing Tesla to be a leader in AI and robotics without having 25% voting control," Musk wrote in a post in January. Investor Ross Gerber, a longtime Tesla bull, called the demand tantamount to blackmail in an interview. It all adds up to over $230 billion in lost market cap for Tesla and its shareholders since the calendar turned to 2024. That made for a very lucrative quarter for short sellers, who've been expecting such a downturn. According to data from S3 Partners, Tesla shorts are up more than $577 billion in 2024, making it the most profitable name in the U.S. Short interest at the end of trading on Thursday was about 376% of float, representing $1871 billion in notional value. Altimeter Capital's Brad Gerstner is buying the dip. Gerstner told CNBC this week that the company is now making massive progress at an accelerating rate on its self-driving technology efforts. Musk has been making such pronouncements for years. In 2015, he told shareholders that by 2018, Tesla's cars would achieve full autonomy and be able to drive themselves. In 2016, he said Tesla would be able to send one of its cars on a cross-country drive without requiring any human intervention by the end of the following year. Tesla still has yet to deliver a robotaxi, autonomous vehicle, or technology that can make its cars into Level 3 automated vehicles. However, Tesla offers advanced driver assistance systems, ADAS, including a standard autopilot option or premium full self-driving FSD option. the latter of which costs a $199 a month for subscribers in the US or $12,000 up front. In a push for end-of-quarter sales, Musk recently mandated that all sales and service staff install and demo FSD for customers before they hand over their cars. He wrote in an email to employees, "Almost no one actually realizes how well supervised FSD actually works. I know this will slow down the delivery process, but it is nonetheless a hard requirement." Tesla Inc. shares have faced a tumultuous ride recently, with a sharp decline in value. Let's delve into the reasons behind this downward trend. Delivery estimates and investor confidence. Delivery estimates for Tesla's first quarter have been repeatedly reduced, eroding investor confidence. Even if the numbers modestly beat expectations, it will be challenging to spin them positively. Valuations often hinge on a company's weakest link, and for Tesla, that is its automotive business. The stock has given up all its gains since mid-May and has shed over $350 billion from its market capitalization since reaching a 52-week high in July 1st. Demand for electric vehicles (EVs). The biggest cloud hanging over Tesla is the slowdown in demand for electric vehicles. This decline coincides with increased competition from both legacy carmakers and Chinese rivals. The soon-to-end first quarter is likely to rank among the stock's 3 worst ever. Analyst sentiment. Analysts have dialed back their estimates for deliveries, revenue, and profit. The share of bullish ratings on Tesla has dropped to the lowest level in about 3 years. Enthusiasm toward Tesla has eroded significantly, leaving investors concerned about a lack of new catalysts. Market performance. Tesla's stock is down 28% this year, compared to a 10% advance in the S&P 500 index. The EV maker is the biggest percentage decliner on the S&P 500 so far in 2024. The confluence of factors, including delivery uncertainties, EV demand slowdown, and market sentiment, has contributed to Tesla's recent stock decline. Investors eagerly await the company's first quarter report for further insights into its performance. Despite its name, Tesla's premium option requires a human driver at the wheel, ready to steer or brake at any moment. Despite the dark clouds, one analyst thinks Tesla is about to turn the corner. Has Tesla hit bottom? Wedbush analyst Dan Ives maintained an outperform buy rating on Tesla stock while lowering his price target to $300 from $315. That still represents an upside over the next 12 months of 71% from Thursday's close. Ives said Q1 was a nightmare quarter, resulting from a perfect storm that weighed on sales. He expects softer deliveries will result in a rip-the-band-aid-off quarter for Tesla investors, though Ives remains bullish over the long term. To be clear, the stock will likely remain volatile in the coming weeks. Tesla is scheduled to report its Q1 deliveries on April 2nd, and investors shouldn't get their hopes up. Analysts' consensus estimates are calling for roughly 471,000 units, but more recent forecasts put that number closer to 420,000. Furthermore, the price war in China likely had a negative impact on Tesla's margins and profitability. Either or both of these could weigh on investor sentiment, and the stock could fall further. However, this perfect storm may finally be easing. Tesla announced plans for a modest price hike of $1,000 for its Model Y beginning in April. The company is also taking a hands-on approach to its full self-driving FSD in North America, installing the feature by default and taking customers on a test drive to demonstrate the technology, which could boost revenue. Tesla has faced challenges before and emerged stronger afterward. Furthermore, at roughly 4 times forward sales, Tesla's valuation is near a 4-year low. Now is the time to buy before the likely rebound to come. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.